I am not a financial advisor, and I never give financial advice on this channel. 100% of this content is for entertainment purposes only. Hello everybody, I hope you're all doing well. It's Lane here with MetaShackle. This is the second part of a two-part series based on viewer's choice. So if you are watching this video, please do go back and watch the number one video first. And I do have to make a correction. After looking at my charts, I realized for some reason that my trading view had switched from the 200-day moving average to the 100-day moving average instead. So all of the charts that you saw in the number one video were displaying a purple line, which was the 100-day moving average and not the 200-day as I believed it was. I will also be staying with the 100-day moving average in this video just to keep them consistent. But I have been having some issues with my trading view lately, and I'm not sure if it's just me or if other people are also experiencing this, but I've been having my indicator settings get wiped out. My Gaussian channel just completely removed itself for whatever reason off of my charts the other day as well. So I will be double checking this previous to hitting the record or previous to making any charts in the future, but I just wanted to bring that to everybody's attention. So it's not the 200-day moving average in the video one, it is the 100-day moving average, and it will also be the 100-day moving average in this video. But we will be going over XLM, XDC, Ondo, and XPR as a part of the viewer's choice. All of these were chosen by you, my subscribers and Patreon members, voting on the top 2 cryptos out of 8 total. But just to show my appreciation for each and every one of you, I decided to cover all 4 rather than just the 2 winners. This way, it won't leave many of you waiting who are just dying to see the charts on some of these other cryptos. And I really do appreciate your support. So please do me a favor and hit the like button right now, because you know you're not going to remember by the end of this video, as it helps me beat the YouTube algorithm, and I'd really appreciate it. For additional information and exclusive perks, do consider joining me on Patreon. Simply use the coupon code META and get 25% off of your first month. This applies to all 3 tiers. So let's not waste any more time and let's get into the video. So first off, we're going to be taking a look at XPR, not to be confused with XRP. This wasn't the easiest chart to create because my charting methods, which are unique to me, doesn't work well with certain cryptos, depending on the price action and the swings. But I was able to get it in there. I was able to find out exactly where it fit so that the information that it presents is as accurate as possible. So first off, taking a look at XPR, we had this big move up here setting a pattern high on January 26th, breaking through the positive 6 line on my Fibonacci's, setting this pattern high. Price then fell back down, coming down here and touching the -5 line. And just like I told you in the last video, we tend to see this as above, so below type behavior. So if you see the top level being taken out and price is trading around here, just assume that it's going to do the same thing or very close to it on the opposite side of the chart. There was a pretty good liquidation candle right here. Price traded up right around the area of the equilibrium zone, falling back down, giving us the second point that we needed to set this lower trend line. A straight trend line did not work very well on this chart, similar to what we saw in the Shiba Inu video, so I improvised by using a curved line, and I've used these in the past and they tend to be much more accurate than just running a straight line down here, and it also gives us a little bit more information. But as you can see, we're currently trading below the equilibrium zone, right around the level of the -1 on my Fibonacci's. We are trading below the 100-day moving average. We have a weak doji reverse waterfall right here at the point 0.033 level. We are currently trading within about the center of the Gaussian channel and below the upper trend line. We also have a weak doji waterfall up here higher in the pattern, which is at about that 0.00566 level. Keep in mind, this is on the daily chart, and this reverse waterfall down here is on the 4-hour chart. But generally, when you're marking out weak dojis on a chart, you want to keep the time frames fairly close. So in my case, what works for me and what I use often is the daily and the 4-hour. But I almost never intermingle the weekly with the 4-hour. But sometimes I will use the weekly intermingled with the daily, just for clarification. So price is looking fairly weak right here, trading below the 100-day moving average. What I would be looking for is price to get up above this 100-day moving average, moving towards the bottom of the equilibrium zone and potentially breaking this trend line, as well as moving towards the equilibrium line, which is currently trading at 0.00468 area. If we can get up above the equilibrium zone with the full body candle with the wicks included, I would be looking at this weak doji right here. If we can get up and above that, I would be watching this high. I would be watching this high right here. If the pattern breaks down, I would be looking at this weak doji. And it's very likely that if that's the case, it would be supported by this lower trend line. And as that trend line is moving up, it's most likely going to drag price up with it, assuming that it doesn't get above the equilibrium zone. So depending on how much time has passed and how weak this continues to be, this lower trend line may actually force price to go up into the equilibrium zone. But if you take a look at the charts right here, how this is nice and flat, you can actually see that there's accumulation going on here. So there's a good chance that perhaps we could see XPR make a move up in an attempt to get to the equilibrium line, perhaps even higher. But I would watch this, especially this high right here, because if we break above that, there's a good chance we're going to the green equilibrium line in the center of the equilibrium zone. But overall, XPR actually looks fairly weak. I'm not too impressed by looking at this chart, but at the same time, it's near the low of the pattern, which is much better than getting in up here. Next, taking a look at the Ondo chart. During the Trump pump, we came from down here around where the -5 is currently up to the top range, right around the +4.5 level on my chart. Price then fell down, consolidated around the lower end of the equilibrium zone, forming this bearish fair value gap you can see in the red here, before coming down to this area, bouncing off of the bullish fair value gap at the bottom of the pattern, and then setting the pattern low right here on April 7th. As I said earlier, the pattern high that was set right here on December 16th is up near this 4.5, and we actually went right through that same area on the bottom side, but you can see how they generally tend to reach about that same distance on each side of the chart. This descending wedge pattern that we've formed has been broken out of at about April 11th, testing back off of the upper trend line right here, forming this very small bullish fair value gap. Price then moved up into the Gaussian channel and was rejected off the 100-day moving average, to which price came down, moving up and breaking through, forming another bullish fair value gap. We are now on top of that fair value gap, as well as being supported by the 100-day moving average. We do have a weak doji reverse waterfall that is formed right here around the 86 cent level, just at the bottom of that bullish fair value gap. We also have a bearish fair value gap just above that, centered at about that $1.96 level. We have a weak doji waterfall formed right here at 120. We also have one just above that at the 132 range. It looks like we could see some pinball action right here, but having the price trading above the 100-day moving average is a very good sign. I would be watching for price to break through this bearish fair value gap, which could potentially turn it from resistance into support, and then a move up to this weak doji, as well as this one. If we take this one out, look to this one. Then I would watch this area right here at the bottom of the equilibrium zone and where this bearish fair value gap meet, because this could be very hard to get through. However, if we do get through this, get up above the equilibrium line, which is at about 144.5, and get above this with a full body candle, wicks included, we could make a run for this weak doji waterfall right here, centered at the 167 level. And we also have one higher up on the pattern right here at the $1.89 mark. So even though we're trading at the bottom of the pattern, there's a lot of things looking good for it. It's resting on top of the Gaussian channel. It's being supported by the 100-day moving average. It's currently sitting on top of a bullish fair value gap, which could act as support. If this breaks to the downside, I would watch to see how deep it encroaches into this fair value gap. If it breaks through this, I would watch this weak doji right here. If it comes through that, I would watch this fair value gap. And worst case scenario, down here near the pattern lows, I would be watching this bullish fair value gap. As it has already acted as support on 2 previous occasions, it would likely do the same thing again. So it might not be a bad idea, and this certainly is an investment advice, to stack a couple limit buy orders down in this area somewhere, just in the off chance that perhaps they might fill, giving you a lower average, especially if you bought up here in the higher range. But overall, I think that the Ondo chart is looking pretty good. And if you followed my channel for any amount of time, you know that I'm a big fan of Ondo, and I think it has a very bright future ahead of it. Now moving on and taking a look at the XDC charts. I've had a lot of people ask me about this chart recently, and I'm glad that I finally got the opportunity to go over it and take a look at it. We moved up pretty good during the Trump pump and even afterwards, setting the pattern high right here on January 16th at right around that 15.5-cent level. Price then consolidated, falling back, punching right through the equilibrium zone, retesting off the bottom portion with the wick getting nearly to the equilibrium line, which shows you how important these equilibrium zones are. Price then fell back through the Gaussian channel, came down to the bottom of the range at the -3, -3.5 line, punched through, hitting the -4.5 line, nearly matching the same move that we saw here up at the top. Looks like we've had a pretty decent round of accumulation down here towards the lows, and price has now moved up into the Gaussian channel, which has just turned green, and price is being held down by the 100-day moving average, but staying on top of this bullish fair value gap down here that we have centered at about that 0.069 level, which subsequently is almost nearly centered with the -3.5. We also have a weak doji reverse waterfall right here at the 0.0682 level. Overall, this chart is looking fairly weak, but that doesn't mean that we can't get a big bounce out of here at some point, perhaps after taking a draw on the sell side liquidity that is resting most likely below this low right here at about the 0.0688 level. If we do start to move up, first I would watch for price to break through the 100-day moving average, breaking out of the Gaussian channel second. Then I would be watching this bearish fair value gap that is right around the -1 line on my Fibonacci's. If we can get above that, this will likely act as support, as well as the upper trend line, which on this chart I've also chosen to use a curved line rather than a straight one, as I think it's going to be more accurate in the long term, which gives us a good chance to get up here to touch the equilibrium line. And if we can get up above that, forming a full body candle with wicks included, I would be looking next at the weak doji waterfall sitting right here at about that 13-cent level, as well as our second target, which is right here around that 14-cent level. If we can get up and take these two out, we'll have to reassess, but there's a good chance that the equilibrium zone at that point may act as a support zone as price gradually moves up towards this high right here, which won't be easy. But if we can get above this high, things would get a lot easier, as there is a lot of buy-side liquidity sitting up here, I'm sure. So overall, looking at XDC, it looks very, very weak. And the other thing with XDC that I've never liked about it is it has the ability to make incredible price gains very quickly, but it also shaves off that profit very, very quickly. And if you take a look at this liquidation candle, which you can see on the same date throughout the whole crypto sphere, you can kind of see what happens when price gets rejected around the bottom side of the equilibrium zone, and as well as the reaction that we saw here for a full-blown rejection. So I am a fan of XDC, and granted, if you were going to buy or stack on your position further, you're going to be a lot better off buying down in this area than you are buying anywhere up here, which is exactly why you're seeing the accumulation down here that you're seeing, because people are most likely stacking, adding to their positions. But there is a lot of weakness right here. We absolutely want to see it break above the 100-day moving average first, which would be a great sign of strength. Then, in my opinion, you should wait for a possible retest, which could give you a lot of extra information that we're likely to go higher. But one of the most important parts of this would be breaking above this bearish fair value gap and outside of this trend line, because at least challenging the equilibrium zone, we have a chance that it might be able to get through, and if it does, we're going to see an explosive move coming out of it. Can you see how important these equilibrium zones are? This candle filled it completely perfect, and look what happened exactly at the point when price got up above it. Absolutely explosive move coming out. So I would be very cautious with XDC, but at the same time, I wouldn't be too cautious as to not add to my bags, because I think this particular crypto is a sleeping giant. Now moving on to XLM, which I recently covered, but we'll go over it again and see if there's been any changes. The Trump pump brought the price up, setting this pattern high right here around the number 3 line on my Fibonacci's. On November 24th, XLM actually came up and hit this pattern high very quickly. We didn't see a lot of the other cryptos hit the pattern high till much later than this, moving into mid-December, even into January, which could testify to the fact that when this breakout begins, most likely moving into the month of June at some point, that we could see XLM do the same thing, jumping ahead of the pack. As I've been talking about in my previous videos, I do think that that's going to be the case. I think on a percentage basis, we're going to see XLM outperform XRP. Even though I do believe that they both have an incredible future ahead of them, I do believe that XRP in the long run is going to be much more valuable. But XLM will absolutely have its place, which is why I hold both. Price then collapsed from the pattern high, coming back down into the equilibrium zone, which acted as support to a degree. Price moved up, getting rejected off the positive 2, giving us the second point we needed to form the descending wedge pattern. I need to erase this really quick. There we go. This is the 100-day. Price then came back down. Here's that liquidity candle from February 3rd that we just spoke about. Price came back down here, forming the pattern low right down here at about 20 cents, not quite touching the bullish fair value gap at the bottom of the pattern. As many of you know, we have formed an inverse head and shoulders pattern right here, which we just broke out of, and look to be retesting right now, resting just above the 100-day moving average. We do have a weak doji reverse waterfall right here at the 26.5 cent level. We also have what I call a shadow, which is basically just a hidden trend line right here. Overall, this looks fairly bullish, although we know there is quite a bit of sell-side liquidity resting in a pool right here below this low right here. If price breaks out, watch for it to get above this bearish fair value gap centered at about 30 cents, moving into the equilibrium zone. And as you can see, we've already tested off of it one time right here, taking out this weak doji waterfall right here at about 35 cents, moving up to the equilibrium zone, which is centered in another bearish fair value gap right here at about that 38 cents to the equilibrium line at about that 38 cent level. If we can get up above this, taking out this weak doji waterfall at 43 cents, this will likely act as support, moving up to this higher weak doji waterfall at 48 cents. So I would watch to get above this fair value gap, then I would watch the equilibrium zone, and if we can get above this bearish fair value gap, look for it to perhaps act as a support mechanism for us to get up and take out these weak dojis here, as well as this high here, resting at the positive 2. If price comes down, look, I would be watching for it to break this weak doji right here at the 26.5, and then I would be looking to see what happens if we hit this liquidity zone, as we do have this bearish fair value gap, which could act as support, as well as this upper trend line of the descending wedge pattern. So overall, looking at the pattern, you can see there's a lot of support mechanisms. We got the 100-day moving average, retesting off of the neckline of the inverse head and shoulders pattern, trading on top of the Gaussian channel, as well as this upper trend line, this bearish fair value gap. To the upside, we have a lot of potential if we can start gaining some ground, because if we can get above this, we are so close to the equilibrium zone, having already tested it, that there's a good chance that we will make it up to the equilibrium line very easy. Crossing this bearish fair value gap could give us the support we need to jump through and start taking out these other weak doji targets, and potentially coming up and taking out this pattern high at around that 63 cent range. Because unlike XRP, XLM did not hit a new all-time high, not even close. So at some point, if we do see this breakout, which I believe has already started with XRP, we've definitely seen it with Bitcoin. If we get the right draw on liquidity at the right time, there's a very good chance that moving into June, we could see what we would all typically think of when we think of the term breakout/bull run. So I would keep a close eye on XLM, because if you hold XRP, it might tip you off, because XLM might come tearing out of here while XRP is just kind of hanging out for a minute. So that could tip you off that we're about to see it translate into XRP as well. And I would also watch for XLM to have a higher percentage gain than XRP, and also comparing XRP to Bitcoin, because as you know, the two have been diverging quite a bit, and Bitcoin has been showing a lot of strength in the last 24 hours, and XRP just got slammed with some horrible news, which is likely to depress the price quite a bit, giving XLM another reason to be able to jump out into the lead. But overall, I really like what I'm seeing in this pattern, especially to where it's above the Gaussian channel, it's above the 100-day moving average, it's right around the range of the neckline. We've got this upper trend line of the descending wedge pattern to hold it up. So there's a lot of things that could be working to the advantage of XLM to be able to make a move to the upside. But if we do punch through here, I would definitely be watching this area right here with this fair value gap as well as that upper trend line, because the move coming off of that could be explosive. That draw on liquidity that would be created right here at this liquidity pool, coupled with these support mechanisms, could literally create a candle like this so quick that you wouldn't even be able to react to it by the time it was already over with. And if that candle gets us up through the equilibrium zone and up above the equilibrium line, if we form a candle above that with the wicks included, we might have an interesting situation on our hands, and it will definitely be something to watch. So thank you so much for watching this video. I appreciate each and every one of you. Please do me a favor and click the like button, as it doesn't cost you anything and it definitely helps the channel, and it's not easy to get through the YouTube algorithm. So thank you so much. Have a great day.